questionnaire. And the next session, we will answer on that questionnaire first 15 minutes. We'll try to answer the previous session question, and then we'll continue the next session. Hope most of the people completed this quiz. Small quiz just for the exercise to be keep active in the session. Shall we proceed? Okay, let's start today's session. Part 1, the corporate tax timeline. So corporate tax registration timeline. The registration timeline, we will discuss in the overview of the corporate tax registration, because most of the time is the registration timeline already passed and most of the companies are registered. So corporate tax announced in 31st January 2022. And the registration open for the private and joint stock company is 15th May 23. So again, this is just for reference purpose. We are discussing the first, we are discussing the most of the companies, the tax year from January to December. So if the first tax period is in January, so the tax period ending will be 31st December and the return will be due after the 9 months of the year end. So similar way, if the tax period is June to 31st May, accordingly, the first tax return will be due on 28th May 2025. The tax period for natural person is the Gregorian calendar year. So tax period for the natural person, there is a no separate or the different tax period. So this is the by default they mark for the natural person Gregorian calendar year. That we will discuss in detail what are the other benefits for the natural person and compliances that required. Overview of the city law. Most of the company, as earlier I mentioned, the year end is changed to December and return is 31st September is 2025. Now 31st December is already over, but still the return for the companies is not yet open. So it will take some time. FTA will working on that. It's soon it will be open, because this is the first year and it will maybe some IT related or something. They are working on that. It will be open soon. Now we have to see what is the tax rate in the UAE as per the corporate tax. So commonly people knows the 9% the corporate tax in the UAE. But if in fact the 9% is not applicable on all the industries, on all the companies. So the applicable, there is again different things that we will understand. The 9% on most of the companies and the 15% on the MNEs, multinational entities. Then there is a free zone. The free zone is zero rated. Why the free zone zero rated? As part of the UAE initiative, they declared the free zone and they established the different free zone in the UAE. The free zone, we have one, maybe the two session, but more than two session, the detailed understanding of the free zone, what are the compliances, what are the qualifying income, what are the qualified free zone, and what are the de minimis rule. So this in detail, we will go in that topic. So here we understand the free zone that meet the condition based on the designated zone or activity, they will be fall under the zero rated. But still, some activity they not meet the condition or other they subject to the 9%. We will discuss in detail. This is the comprehensive topic, and most of the companies in free zone they are interested to understand the compliance about this. Let's say the next is the group of the UAE resident company. So as per the corporate tax, the companies, the first step to register as a individual companies under the city. Then they have to apply for the group of the corporate tax, in which the 95% shareholding is direct shareholding is required. Apart from that, other conditions are there. Now, city is a calculated, declared, and paid. As we're saying, here we're talking about the 9 return, corporate tax return. Now, the most of the professionals are working in the industry or the consultant. They are discussing with clients how to proceed for the year-end closing, because return is the second part here, the most important area. Mostly even the clients they approaching and the financial team are approaching to the consultants. They are talking about the corporate tax return preparation. But before that, the one key area, the return, whoever is prepared the return, if your financial statement is not prepared appropriately, if your financial statement not prepared appropriately as per the applicable IFRS and accounting standard, so your tax return cannot be accurate. And secondly, you cannot take you cannot plan the corporate tax where you will comply the law and optimize the tax liability. To have the optimization of tax liability within the compliance, and which the compliance they're beneficial for the organization. So that have you go through in-house, and maybe the most of the big companies are the professionals who are background from CA, ACCA, CPA, all other professional bodies. They understand what are the application of the IFRS. Again, the IFRS, we will see what are the applicable IFRSs, because IFRS, full IFRS, and the SME IFRS also is there. We have to go through that part also. Now, the next topic is, while discussing the corporate tax, the transfer pricing is the part of the corporate tax, the compliance and the documentation. That also will go through in that transfer pricing, how and what are the documentation is required, what are the compliance is needed, and what are the ALP rules, what are the transfer pricing method that will be helpful. There will be master file, local file. Most of the company have to maintain the master file, local file. Next is the participation exemption available. Participation exemption, if we understand the companies having the shareholding, they buy the shares of another company. Okay, so that we call the participation. The participation, because if you are part of the another company, based on the shareholding and based on the number of shares, you will get the dividend from that company. So now we have to see such dividend from that company is exempt or taxable. We will go through, this is the, again, roughly 3 to 4 session will be on participation exemption. Where the industry or the consultant are having such kind of clients, they knows how critical and how tricky area of this, how important to understand. So the filing will be 9 months from the relevant tax period end and will be payable within the timeline. So here again, we just for reference purpose, we adding the fiscal year, physical reporting, and the city return date. So same December year ends from January to December. This is the fiscal reporting period, and then the return will be 9 months, that is 30th September. Such thing we are adding on number of time because it's important to keep sharing the insight on that if somebody have the question or in the understanding to be clear, because mostly the corporate tax while registration, we seen the many companies, the most of the SME sectors, they did not register for the corporate tax and they have the penalty of 10,000. Why? Because they are mixing, getting confused with the VAT. So they think there is a threshold to register, and here we do not meet the threshold. And most of the small companies, they are not familiar and they don't want to be listen any of the professional or auditing company or the who's provide such services. They are not directly touch with them, so they also did not understand and they having the penalties. So every day that we are receiving the queries, okay, we have now 10,000 penalty for the late registration. Now what we do, we are receiving the daily basis, the emails and the messages from the FTA. Although this is the FTA by default from the system generated, the reminders are coming, but still they are worried. What is the way forwards if we can get the waiver on that? So this is the important part. We have to understand the as part of the administrative penalties, the waiver normally is not be eligible. Some exception is there, but that exception is only the very difficult to prove that also in the reality base, but normally the admin penalty get waived only when the FTA have the some ministry scheme. Based on that, if we remember the back in June 2021 or 22, they announced some amnesty scheme where they said pay the 30% and of the outstanding or the penalty amount, rest will be waived off. So in the worldwide also, when we see the new tax regime in the country is implemented, so the government, they give the support and as a new regime and they give flexible to the taxpayer, and after some time they will give the relaxation on that also and the waive of the penalties also. And recently we've seen the record update. Okay, so the record update, they give they waive the penalty. Earlier most of the companies, they paid the 5,000 because within 20 days in case of any change in the shareholding and any legal status or any part of that, you have to update the FTA, but most of the organization not familiar with that rule and they did not update. So now while doing the corporate tax registration, they found the record is not updated and FTA applied the penalties on that. But now maybe the last quarter, they give the relief on that and they waive the penalties, and whoever paid, they return the penalty amount also. This is the announcement from there. So we do expect the waiver for the late VAT corporate tax registration. We are expecting as a part of new regime, FTA will do the reconsideration on that, and more likely it will be June or September, some notification from the Federal Tax Authority will be there. But still, it's the FTA decision how they will treat. But considering the overall framework and the worldwide new regime, we do expect this. Let's move to the next. So now the next topic, that is a very important topic. Corporate tax is who will pay the corporate tax and who will not pay the corporate tax. And the corporate tax will pay on which income? This is the important part. And then below we are seeing the taxable person for the corporate tax, because then here the corporate tax, the word the corporate itself is shown. This is the companies, the companies doing the business. This is the corporate tax. But the definition of the corporate tax, they say the juridical person and any other person who have the business income. Who have the business income? The important part, the business income. If you are generating the business income, that is fall under the corporate tax. Normally, even the natural person is generating the business income. We have to see in detail that even the natural person is getting the business income, but still we have to see the detail. What are the exemption for the natural person and what are the area in case of the natural person, the wages, salaries, personal investment that is not subject to the corporate tax. But apart from that, any other income that is subject to corporate tax, but we'll go through in detail. So while discussing the corporate tax, certain people who will pay the corporate tax and some certain people who will not pay corporate tax, we will go through that part also. Normally, the definition of corporate tax, we called that paid by the taxable person, the corporate tax paid by taxable person on taxable income according to tax period. So this is the definition for common understanding and as per law, how it will work. But further, we will understand how it will move. Now here we mention corporate tax paid by a taxable person on taxable income according to tax period. So now the important part here to understand what is the tax period. In the UAE, they mentioned the company accounting period will be tax period. Whatever the company tax accounting period, what is the accounting period? How we know the accounting period? The company's accounting period, it will be written as per the company law. While registering the company as per the company commercial law, the latest one is the June 2022, in which all the latest updates are there. Based on that, whoever the company have the memorandum of association, memorandum of article in which already predefined the company accounting period, and in which many other conditions are also mentioned. Here is one important point, the corporate tax is coming now. Corporate tax regime is appearing, coming now to the UAE. But the company law is past many years, past decades are there. So the corporate tax respect the company law. So now we see in the many cases where the corporate tax considering the company law and then they are applying their own regulation. So they cannot come and simply say, okay, now the corporate tax came and whatever the previous regulation that will be disregarded. They might give the update on certain regulation, but the first we have to understand the company established. Our company is a legal person. Company established based on the commercial law. So most of the things are followed from the commercial law. Why I'm referring again the commercial law? Commercial law, first we have to see the accounting period. Second, we have to see the dividend. When we declare the dividend, because the dividend mostly now the small company, they are not following they are not even following the annual general meeting. They are not following the dividend. What is the declaration? What is the profit distribution? What are the board resolution? So all this document, most of the multinational company, they already working on that, they're following that. But the SME sector or the small companies, they do not have the in-house compliance team. They have to check externally and see the information, what are the compliances as per the company law also. As per the company law, the audit is also required. And normally average is 30 and 90 days from the end of the year. They have to call the annual general meeting and uh, submit the financial and nominate the auditor also. This is the company law. So even the corporate tax have the some other guideline on the audit, but the company law already mentioned the audit is mandatory. You have to work on that, and even the company established based on that. In case of any dispute or in case of any query from the Ministry of Finance or any of the DED, they will ask the audit report and they will ask all the previous data. As per the company law, we have to keep the 7 year, the previous accounting record. And as per the corporate tax also is the 7 year. Let's move to the next. Now we are seeing the taxable person. Who's the taxable person? Because in next slide, we have mentioned the taxable person details we will discuss over there. Now, the taxable person can be separated into taxable and the exempt person. Let's continue with the exempt person. So then we will see, we will go, before going, who are the exempt person, let's see who are not exempt person. Because mostly the people understand, and the UE also, other profession also, they maybe have the ambiguity on these also, they are the exempt person. Real estate companies, we will have the detail in the example also for understanding. Real estate companies, insurance companies, bank and financial institution, they are not exempt person. They will pay the corporate tax. So we here allocate, we added one example, that is a natural person versus real estate, that for understanding why the real estate companies pay the tax and the natural person will not pay the tax, because the UE government, they given some relief to the natural person in terms of the real estate. Now, maybe we've seen in the last 1 year, since the corporate tax is announced, so most of the people, even they have the property under the companies, they transferred under their personal names to take the advantage of the corporate tax. Although this is falling under the GAR rule, the anti-abuse of the city law, because you are doing this activity to avoid the corporate tax. So that is fall under the GAR rule, anti-avoidance tax rule. Anyhow, let's move to the other, that we see the exempt person. Who are the exempt person? So normally we have the details, I mentioned the chapter 3, in which we will discuss the further detail of these entities, but we will have the enough information today to discuss and understand this also. Because this area I'm highlighting here, because when you know, okay, these are the exempt person, you go and simply search on the Google also. Here I added the link for that exempt person also. So I'm opening that exempt person. Maybe I have to go out from here. I'm just going to the, I just link here. Here on the FTA website, we can see the who are the exempt person. Some are the automatically exempt, some are the notice-based exempt, some are the different criteria. I just show you how you can check on the Google and see the exempt person. But let's come back to the our presentation. We are discussing the exempt person. Under exempt person, government entity, government control entity, and the extraction and non-extraction. Extraction and non-extraction, normally we have UE resources, minerals, oil and gas, normally oil and gas, and the gold also in Fujairah, some area, the gold also there. So normally refer to the extraction and non-extraction, natural resources. In UAE, the natural resources, oil and gas, and the gold also in certain area in Fujairah. There is certain area they have the gold also. Now the next here we are discussing the government control entities and okay, the government entities already we know the government control entities, ownership of such entities with the government. We will go in the next slide and discuss what are the government control entities. Extraction we already discussed. Here we seen the qualified public benefit entities. The qualifying public benefit entities, the charities, even as per the VAT, also they, if you paid the some amount, the donation to the public qualifying benefit entities, that is the you can take the exemption, but not all the entities. Whoever is listed in the public qualifying benefit entity, that whatever the amount of donation paid, that you will get the exemption from the corporate tax also. So here now the important parts we have to understand some of the like government entities and the government control entities are automatically exempt. Automatically exempt, these are specified in the cabinet decision. So what is mean by automatically exempt? Automatically mean you do not have to apply for the corporate tax for exemption. Because first, even if they exempt, there is certain entities we will discuss, they have to be applied to the FTA and submit the application for the exemption also. Now the next is extraction and non-extraction. We discuss the natural resources notified by the Ministry of Finance. This is the notified by the Ministry of Finance, because such entities, because extraction and non-extraction, they are already paying the emirates level taxation. So the notification to be submitted. Further, we'll see what are the detail over here. Let's move to the next. We'll discuss in next slide in detail this topic. And some is the we have to apply for the corporate tax exemption also. Now we are moving to the next point, taxable income. Again, the taxable income here. The important part here, we are discussing the taxable person. We discussed the taxable person and the exempt person. Now we are discussing the taxable income. Similar taxable person and the similar like taxable income also will be taxable and the exempt income. Some income will be exempt and some income will be at the standard rated. Standard rated the 9% or 0 rated or the 15%. We will see that part also. We will see the example of the exempt income. Example of the exempt income is the local dividend. Why the local dividend is exempt? There is certain regulation also there for this local dividend fall under the participation exemption. The participation exemption, but if the local dividend paid by the UAE-based company, that company will pay the dividend after paying the corporate tax. So subject amount is already deducted the corporate tax. So again, the double taxation will not be there. So that this is the reason the local dividend will not be part of your computation for the corporate tax, because the company who paid the dividend, he paid after the corporate tax. Now the tax, and the other is the taxable income. Taxable income will pay the corporate tax according to tax period, that is a 12 month. Now let's move to the next, the exempt person detail. Again, the exempt person detail, we already, I link here the exempt person. This is also important because why I'm, even you can see on my screen also link is appearing over there. This link, you can Google it on that and go and check that. Let me click this, but we have to go out of. Again, the same link, exempt person is shown over here. I'm again coming back to the slide. Now here we the important part we are understanding here, the which are the exempt person automatically exempt from the corporate tax, and which are the person that we have to submit the application. So government controlled entities. So what are the government controlled entities? Wholly owned and controlled entities of the government. The public sector, mostly the government entities who's running the like the DED, Dubai Economic Department, and there is another companies who's wholly owned and controlled by the government. Now here, because the public entities, they are doing the mandated activities, specified activities. As per government, they have to support to run the government operation. They are doing the mandated activities. Mandate activities specified in the cabinet decision are approved in the cabinet decision. Income taxable on the income from the non-mandated activities. So whatever the activities in the cabinet decision already mandate to such entities, even the government and the government control entities, that will be exempt. But if they part of any of the operation or any of the activity that is not mandatory activities, and they will pay the corporate tax on that if they are exceeding the 5% of the total income of total revenue. So we will see in detail also what are the non-mandated activities. So here that we are saying do not register for corporate tax. You don't have to apply. By default, you are automatically exempt. If you do not register for corporate tax, you will not submit the corporate tax return as well. So government control and government entities is the same. 100% owned by the government. Now here the next point we are looking here, the automatically exempt from the corporate tax. Automatically exempt from the corporate tax, extractive and non-extractive. What is extractive and non-extractive? Let's see that. Here the right or interest in concession are carried in the state. Normally earlier, as I mentioned, if you are extracting oil and gas and any natural resource, because you've taken the right for the natural resources from the government and you are paying the Emirates level taxation. So such are the extraction, because extraction also will go in later on discuss in detail what are the extraction and non-extraction. Extraction directly linked from the, if you extracting the oil or gas from the sea or the land, that is extraction. But after extraction, you are processing further that item or the commodity or the product, that is a non-extracting. Because still you are doing the refining the crude oil, that is called non-extracting, but other activities are also part of that. So here we are discussing taxable on any other income. If such extractive and non-extractive business, they are generating any other income that is exceeding the threshold of 5%, exceeding the threshold of the 5%, that's subject to the corporate tax. Now, still the exempt person is continue. We have to see the another point, the public qualifying benefit entities. The public qualifying benefit entity, we already discussed, we will donation, some entities working as a welfare and getting the donation from the different organization as a charity basis, but they are approved. There is a certain criteria for the public qualifying benefit entity to get the approval. But for as a consultant or as a clients or as a working in the industry, if you are paying the donation, you have to ensure if you pay to such entities who are listed in the Cabinet Decision 37 that is available on the online, we have to search and see such entities are covered, then we can make the exemption. Dear participant, I'm seeing some of the team members, they are writing on the screen. So, Mr. Ifkar, would you please check this? I appreciate if you cooperate in this. Register for the city. The public benefit entities, they have to register for the corporate tax, submit the application for the corporate tax. Once they register, here is the difference to be understood and to be noted. Previously, we said is automatically exempt. Here we are saying is exempt, but not automatically. First, we have to apply for the corporate tax registration. Then we will apply for the exemption. Then we apply for the exemption. While applying for the exemption, we have to satisfy, yes, here I'm talking about from the public listed entities who get the exemption. They will apply to FTA and get the exemption if they fulfill all the conditions. Then and they have to submit the annual declaration also. Annual declaration, and now we are submitting the corporate tax. They will submit the annual declaration confirming that we are still meeting the condition of the exemption, because there is a list of criteria that met, then they will get the exemption. Now we move to the next and see the other exemption or other business who are exempt. Government entity that we already discussed, qualifying public benefit entities, qualifying investment fund, public pension and social fund, and any other funds, any other person. Here, the important part, the qualifying investment fund. This will be important. We have to understand the which are the funds, real estate funds, because some of the qualifying real estate funds that are the get the exempt, and some is not exempt. Is similar the public pension and social security fund, that also we have to see if we are part of the contribution of such scheme. Because what is the pension scheme? Mostly we are familiar in our home country, the people, government run the pension scheme for their employees. Here also in UAE, they the government having the pension scheme for them also. There will be different portfolio or different scheme or product still running for the government, for the national, and similar our home countries, they are also running. They have to apply for the corporate tax and then apply for the exemption based on the applicable criteria. Here, the important part, the exemption, what we're seeing, they can apply. They not simply go and apply. There is certain condition that they have to satisfy and get the exemption. Now, let's move to the next. The taxable person from the person for the corporate tax. Earlier, we seen that natural person and the juridical person. We have to understand that which are the taxable person for the corporate tax. Let's move to the next. Taxable person overview. We are going to see here who is the taxable person for corporate tax person. Juridical person, that juridical person, normally we say that is a companies. For under the common understanding, we are saying the LLC, LLP, the public joint stock company, and some other form of the companies are also there. So, but the more the important part, the company juridical person can be resident, can be non-resident. So there will be different guideline, different compliance, how to proceed with that. Similar, the natural person can be resident or non-resident. Accordingly, there's some difference or some compliance are there. Maybe resident will get the benefit and non-resident may not get benefit, but we have to see on the each taxable person, what are the benefits are available. Now, real estate income for both juridical and the natural person may be subject to corporate tax under certain scenario. Because earlier we discussed the natural person, if they have property under their own name, they will get the exemption. The real estate income for the exemption means this is natural person have the real estate, it will be exempt. They will not fall under the taxable income. They will not consider under the business income for the real estate. But if the same person having the company and the property is under company, then it will fall under the corporate tax. So this is what they're saying. The companies, the different scenario, they may fall under the corporate tax. Let's move to the next. Natural person. When the natural person is subject to corporate tax. Natural person, if they conduct business or any business activity in UAE. And now here we are again seeing the salaries and wages and personal investment, and the real estate under personal name that are not subject to corporate tax, that we are not we are not discussing. Even below here we are saying they conduct business and the business activity. In the beginning we discussed the corporate tax on the companies, juridical person, and the business income or the business activity. Maybe the companies or any other form of the company or any other natural person who have the business activity. So they are subject to corporate tax. Now under natural person, we have to see which are the business activities subject to corporate tax. But before that, the government, the UAE authorities, they give the natural person relief. What is the natural person relief? The natural person will leave. They said, okay, even the natural person, they are having the business activity or business income. But if it's less than 1 million in a calendar year, in a calendar year is a Gregorian calendar year, Jan to December. There is no other calendar year. There is no other accounting period. For the natural person, accounting period, tax period, it will be Gregorian calendar year, and that is January to December. So now for the natural person, if your income, but here is the important part, which income they have to consider, that we will discuss in detail, because natural person maybe have multiple business. So they have to add all the business to test this relief rule. If all the income from all the activities, so they add over there and then they see if it's less than 1 million or more than 1 million. So this is the carefully evaluate and calculate before taking the call. Even a natural person, you can take the natural person, you can offer the natural person, but still you have to be careful while calculating the threshold. Here the threshold on revenue. Here not on profit. This is the important part. Next, we are saying that what is the corporate tax base. Again, we already discussed the same income from the business or business activity, income from outside the UAE, if related to UAE business. The base we are already discussing he's doing, and the same we are saying this is the corporate tax base. The whether a natural person is resident. Now we have residence. Normally we say the residents. The residents under the corporate tax, the residence rules are there. We have to see the residence. Normally we are living here. The common understanding, most of people are saying, okay, 180 days live in the country, you are tax resident. But each tax jurisdiction, they have their own compliance. Here we will see what are the huge corporate tax residence compliance and how you will get the benefit if the multinational company, the companies running in more than one countries, they may take the benefit from the corporate tax. And even the natural person who are living in another country also, they might apply for the tax residence status and they can get the exemption from their home country or any other country where they are living. There are certain criteria that will be helpful the people to understand and learn, because you can propose to your ownership management, okay, this is the benefit available. We can avail this benefit to claim this corporate tax exemption based on the tax residence, but we'll go through in detail. Next, earlier we were discussing the natural person. Now we are discussing the juridical person. The juridical person, again, the same resident person and non-resident person. Now we are here seeing the juridical person incorporated or otherwise established or recognized in the UAE. Here, the important part, we have to understand the incorporated or otherwise established. The otherwise established is a broader definition. We will see some cases during down the lines, what are the established and recognized in the UAE. This definition is a comprehensive. It's difficult to understand over here without example what is established, because if the company has international company established in UK, they have the branch here. So this is called the other way established or recognized. This is the PE, Nexus. So there is a many formats that we have to see over here. Then another is a point, the place of effective management. Mostly the people are is not familiar with the point, place of effective management. Because the effective management, if maybe the company is established in the another part of the world, maybe UK, Bahrain, or any other part. So, but the operation is running from here. Operation are running because what are the operation? The key management or the decision making of the company management is available in the UAE. If it's available in UAE, so that may fall under the point, place of effective management, that may fall under the corporate tax. But we will discuss such things in detail later on. Juridical person that is incorporated or established, and the legislation and effectively manage and control in the UAE. Just now we are discussing this part. Now the next, whether a foreign company is effectively managed or controlled in UAE. This is important, depends on the facts and the circumstances. Key determination, factors, strategic management, commercial decision are regular and the predominant in the UAE. Thus now we have the overview of this. So these are the key points that we have to consider. Even the company is not in UAE, is registered in a foreign jurisdiction, but is effectively managed and controlled in the UAE, that we have to see based on that. But there may be some cases effectively because like take the example, because person we have the COVID pandemic. If the person is stuck in the UAE due to some such pandemic situation, that may not satisfy this rule, that may not fall under this effective management. But again, we have to give the justification. We have to see on that. Normally, we're discussing such matters. This is the most of the queries that question is coming. How the authorities will know the company effectively managed and controlled from the UAE, although all the operations, bank accounts, and the uh, business operation is outside UAE. See, the government authorities who design the tax policies, they have the depth of the such compliance and regulation and the control measure. They know how to track that. So we don't have to think that way. We have to think positive and try to comply with the regulation. That much appreciated to have the peace to the management as well as to the profession also, where we belongs to that. Because in each professional body, the ethical corporate ethics, the business ethics, we are part of that. We are binding to the ethical code of conduct. So each professional body, they have their own code of conduct. Anyhow, let's move to the next. Juridical person, non-resident person. Earlier we seen the resident, now we are seeing the non-resident person. Now, a non-resident person is a person who is not considered a resident person in the UAE. Now we are talking about the UAE corporate tax. So we will consider the resident from the UAE perspective, because otherwise this understanding of the residence, because some a participant may have the companies or sister companies in the other part of the world. So do not mix with that. So we are talking about the UAE corporate tax. We will consider from the UAE perspective the resident person. Maybe the non-resident person who is not UAE resident, so has a PE in UAE. PE is again, there is a comprehensive topic for understanding. Maybe most of participants familiar through the VAT, because VAT also uh, covered the PE concept. The fixed PE, normally we call the fixed PE, maybe they have opened the branch over here in the UAE, or they have the fixed place of business. Next is the dependent agent. Dep dependent agent. The dependent agent, we normally we understand in a way, if the company is outside UAE, any part of the world, but they have one person through they are doing the business, and that person is doing working for them. They are negotiating the contract for that company. If they are negotiating the contract for that company, I'm just holding over here because some participant is marking over there. Let me understand if something, the queries they have it, or they have any other thing that we need to understand that. Mr. Iftikhar, would you please confirm everything is fine, or they have some thing to be asking for clarification? Anyhow, let's move to the next. I appreciate if avoid the marking on the screen, because name also appearing the participant. So here we've seen the agent. We are discussing the agent, the dependent agent, and the if the company have the person inside UAE and they negotiating the contract on behalf of them and without material modification, they are signing the contract. So they are also part of the dependent agent P. Again, they are subject to UAE corporate tax. Why we are reading here subject to UAE corporate tax? The fixed place P we discussed because such entities will be corporate tax in UAE. Then the next is the nexus income from immovable property in the UAE. If the company is having the property in UAE, they are generating and the income and the property real estate is their main operation. If the real estate is their main operation, so income generated from this, it will be subject to corporate tax. If the natural person or the non-resident person, if they have the property, non-resident person have the property in UAE, but this is not the major income, sorry, the main business, because they can invest here, that may not subject to corporate tax. But if the core income generating activity of the operation is the real estate, it will be subject to corporate tax. And even the company who have only one property as the investment, that some certain guideline also there that may not fall under the corporate tax. Let's move to the next. Part 4, we are discussing key element of corporate tax: accounting period, tax period, corporate tax rate. We already having the understanding the accounting period, tax period. But let's see understand from here also what is the accounting period. Accounting period is equal to tax period. Already we discussed this part. Now the accounting period, we are discussing about the companies. The companies, the juridical person. Juridical person, there is the LLP, private limited, LLP. Okay, LLC is a limited liability company, private company, and LLP is a limited liability partnership, public joint stock company. Here we have to understand this, and the poem also. The poem, just now we discussed this part. We have to understand the accounting period and tax period, because if effectively managed and controlled from the UAE, so that also fall under the UAE taxation. So UAE corporate tax is effective from 1st June 2023. Here is the one of the key point I want to share with you guys, because as I earlier mentioned, the corporate tax is based on keeping the compliance with the company law. Some companies who registered in 1st June till 30th June of 2023. If any new company who's incorporated from 1st June to 30th June 2023, and if their accounting period is changed to December, Now here we are taking the example, if changed to December, which means the company law is mentioning accounting period for the new company can be minimum 6 months to up to 18 months. Okay. So now accounting period is 12 months, but maximum up to 18 months. Okay. So now if we look into that, so the first accounting period normally for the new company is combined with the next accounting period. This is mostly people do. But here, if we combine the first year of the first accounting period, as June to the December, this is almost 7 months. And the next year is the 2024. This is the 12 month. This is the exceeding the 18 month. So such companies are registered in the month of June 2023, 1st to 30th June. Their return was due last year, September 2024. For these 7 months, they have to close the accounting period and submit the return. This part we are discussing over here. Just for understanding, I shared the return. Now the first accounting period on and after the first accounting, the start of first tax period. Guys, I'll just hold stopping here, but I'll share another exercise in the group. So let's work on that exercise. Meanwhile, I'll just clean my screen also. जी सर जी एक मिनट Hi, participant. I'm audible. I shared another link, so hope it is working. Will take only the few minutes to complete that. My apology in case I miss your, because I may not focus on the chat also, meanwhile, the same time. But we will keep note on your highlights and we will try to address these highlights as well. Would you please confirm the link is working and is done? Thank you. And I appreciate while presentation, do not write on screen. We will see, because normally I used to go through with the Teams application, but this time I have the Zoom platform, because as PID platform earlier used to have this session through the Zoom. So we continue this similar practice. The purpose of such quiz to have the active or interactive session and the participation, because such it will be marked as the attendance, and that will be because down the line we will have the exercise session also that is not counted in this 20 session, that will schedule based on the weekend and will discuss in the group, because that exercise session based on the all this previous learning, and you have to relevant the uh, ministerial decision or the cabinet decision that we will mark over there. So we will highlight the key areas that will be understanding for you guys, because while doing the exercise, then we come to know, okay, this is the area, how to understand, how to apply. Theoretically, things may be not very understandable, but while doing the exercise, it will be much helpful. Shall we continue? Yeah, regarding the slide, we will discuss with Mr. Sayed and we'll do the needful for this slide as well. For the most important for this slide to understand the concept, then to prepare the slide, you guys can make your own slide as well, because just and the video for this session also will be available for you guys. Just another 1 minute. If you guys share, hope I'm audible and the things are moving fine, then we will start again. Okay, let's continue. Our time slot is only 2 hours. We have to complete the session in 2 hours, but I'll try my level best to adjust the speed also, but we need to consider the time constraint as well. Key element of the corporate tax. Now we have only, I think, 40 minutes left, so we'll try to cover this topic. Key element of the corporate tax. Accounting period and the corporate tax period. We have to understand the corporate tax rate. We were discussing the accounting period and the tax period, both are same. I'll just make one. Accounting period, we are discussing the tax accounting period and the tax period, both are same. Now, the accounting period for the juridical person, we are discussing what are the juridical person, that is the LLP, private limited liability partnership, public joint stock company. Public joint stock company, normally the shares traded in the stock exchange. LLP is a incorporated partnership. We are saying the unincorporated partnership or incorporated partnership. This is also very key area, on interesting area, point that we discuss the place of effective management, even the management of inside UAE, but operation are outside UAE. CT effective that we already discussed with the example also for understanding. Accounting periods is different. Taxable person have different accounting period. First tax period, just for understanding purpose, we are discussing the first tax period. Accounting period Jan to December. If ours here the important part we have to understand, the corporate tax is starting from 1st June. So 1st June onward, we have to see what is the company first accounting period, because accounting period will be the tax period. We are talking about the juridical person. Now, so if we are saying the January to December, the first accounting period. So now 1st June 2023. So what is the upcoming tax period? Well, January to December is in 24. So our first tax period will be start from January 24 till 31st December 24. Now the next, the first we are saying after June, July will be a pair. July will be there. So if company first accounting period is July to June, then his first accounting period or tax period will be July 23 till June 24. Now, the next we are saying the April, if the accounting period for the company is April to March is 20, then the corporate tax initiated or started or effective is from 1st June, then April, we cannot consider the April 23 to March 24. So this will not be his first tax period, means after the effective date of corporate tax. So here we are seeing in 23, we are discussing in 23, the January will not come. After June, January will not come. So next year, 24. So first tax period, here we are saying if January will not come after June, so first tax period will be the next year. So first accounting period or the tax period will be from July onward as per MOA. So here again, the reference, the accounting period, or it will be mentioned on the memorandum of association. But the accounting period for the natural person is Gregorian calendar year. We say accounting period or tax period. So here we, as we're discussing Jan to December, this is Jan to December 24, July to June, July 23 to July 23 to June 24, and for the theme on. So now here, just for understanding, whatever the accounting periods, that will be your tax periods, the 9 months from end of the accounting period, your city return and the payment due date. So accordingly, we mention. So 9 months after the end of tax period. We may say accounting period, but in terms of tax, we have to say tax period. Now the next is another leg of that accounting period. We already seen the natural person next, because juridical person we already discussed the accounting period, but natural person accounting period by default is a Gregorian calendar year. That is a Jan to December. If they are taxable, if the revenue threshold is exceeded by 1 million, they have to apply for the city registration. Corporate tax period, we already discussed in detail, just for understanding purpose. If you want the law reference, taxable person is required to file a corporate tax return for each tax period Now here the law reference is already there. You can go simply on Google and search the city law article 57. It will be open the city law and you can go to article 57. The first tax period is the financial year or thereof. Normally the tax period is 12 months. And in case of Norway, tax period is a 12 month for any company which is they are preparing the financial year. We can say the Gregorian calendar year, but it may differ is not the same for each. But in FTA, a taxable person may apply to FTA for different tax period up to 18 months. If you have any practical scenario where you are facing the challenges, you may apply to FTA to change the accounting period. One of the example, if you want to be part of the corporate tax group, yes, then you have to, if you're part of any group of companies, you want to make the group, then you all the other conditions are met, meaning you are changing your accounting period. You can submit the notification to the FTA and apply for the change of accounting period. The first period will be 18 months and the subsequent will be the 6 months. They can base on case to case what are the scenario, but one of the example is this. But it can be the lesser than in case of company is liquidating. So then it cannot be the 12 months. It can be shorter period, maybe 2 months, 3 months, whatever as per the actual liquidation process. Here, just for understanding, again, we are presenting the tax period for better understanding as an example. Fiscal year is 1st June, 31st May. Here we shown the first tax period is a 12 month from 1st June till 31st. Here will be some typo error. It should be 23. It should be 23 instead of 24. The 9 months after the tax return, financial year Jan to December, again we are understanding here January 24 till 31st December 24, 9 months after that. If the financial year is April to March, so accordingly, the for understanding purpose, we are represented here from April 24 to the March 25, then 9 months after that. Corporate tax rate. So now we have to understand what are the corporate tax rate. Earlier we have the overview, but let's have the more insight over that. So corporate tax may be the 0%, maybe 9%, maybe 15%. Let's see. On natural person, resident, taxable income up to and including 375 is the okay 0%. We are saying the if 375 threshold is 0%, but we already discussed here. We are discussing only the tax rate. We are not discussing the relief. Taxable income up to 375 is 0 if it's exceeding 375. But here the definition of taxable income, we have to understand the accounting income and the taxable income both are not same. Normally the accounting team, they work as a accounting, prepare the accounting financial statement for the accounting profit, but we have to work on that and then convert to the taxable income. So juridical person resident, we have to see that their tax slab same. The first 375 zero rated above is a 9%. But here again, the effective rate of corporate tax is not the 9%. We will see the example why we are seeing the 9%, because the 375 is a 0, then the excess amount you are paying the 375. Non-resident with the PE in UAE or Nexus or immovable property in the UAE. Here we already discussed what is the PE, because even the non-resident person who do not have the company here, but still they are taxable, same corporate tax rates. Taxable person, maybe the 0 rated or the 9% in case of free zone. And natural person. This is the same, again, it came for the repetition. Part number 5. City rate in UAE, mainland company, qualifying free zone, multinational company. Taxable person, sorry, the UAE corporate tax, taxable person, mainland. Here, the important part we have to understand, we are saying the mainland, non-qualifying free zone person, even is a free zone person, but is not qualifying. So it will be subject to 9%. And any company having an PE in UAE that earlier we've seen some of the example, the corporate tax rate is the first 375 is the 0%, excess is the 375%. So as earlier I mentioned, effective rate is not 9%. We will see how it's not 9%. Let's take the example, taxable income is a 1 million. So first 375 is a 0%. Now from 1 million, we have to minus this. The 1 million is not the accounting income. This is the taxable income. We have to understand and be careful over there. From 1 million, we minus 375, balance is 625. Then we apply the 9% over there. So our tax is a 56,250. Now, what is the effective tax rate? And why we are calculating the effective tax rate? That this is also important part. Effective tax rate, because this is the amount of tax we are paying against the 1 million. So tax amount divided by the taxable income. So this is coming 5.6% effective tax rate. We are not paying the 9%. It may vary according to business effective tax rate. But let's see what is why we are working on that. Because in case you want to increase your prices, you cannot go and if you cannot ask your marketing team or business development team, okay, just increase the prices. As a similar concept, we cannot apply as a VAT. The VAT in where we say, okay, we will charge you 5% VAT. Here we cannot say we will charge you 9% corporate tax, because the VAT is a direct tax, the corporate tax is an indirect tax. So we have to understand what is the impact on our business for the indirect tax. Because again, the owner will not bear, management will not bear, the shareholder will not bear the additional burden of the corporate tax. But on the other side, to increase in price for the 9% also will not be the justification. So we might say to the clients, okay, due to the taxation or the inflation, we are raising our prices. Small business relief, we will discuss shortly. Small business relief is if the business income business revenue is less 3 million or less than 3 million. Important is 3 million or less than 3 million. So they have the, as per the UAE government the initiative, they give the small business relief. So small business relief is available to the natural person as well as the corporate juridical person also. And this is available up to 31st December 2026. So now the next is the qualifying free zone. What is the qualifying free zone? This is one of the special areas based on the applicable regulation. Each free zone, they have their own authority, on body and the regulation based on they are operating. So if they have the qualifying income, what is the qualifying income? We will discuss in detail in the free zone session. What is the qualifying income and what are the conditions and what are the criteria, qualifying income, disallowed, allowed. So here the qualifying income is a 0%. We say the halal income, because if allowed, acceptable in the taxation, we are just for understanding, we are saying the halal income. Just for our understanding, we are using the halal, and maybe for deductible, we are saying the halal, and non-deductible, we are saying the haram. We will use such terminology just for our understanding. We'll discuss later in the next session. Non-qualifying income, the non-qualifying income, again, we have to see if even we have the non-qualifying income, but there is the additional criteria, pass the de minimis test. What is the de minimis test? We will discuss in the detail. Here we are just taking the understanding what is the criteria. If the non-qualifying income pass the de minimis test, so again, it is a 0 rated. So no threshold for the qualifying free zone here. Earlier, in terms of the corporate tax for the mainland and other companies, non-qualifying free zone. Here we are saying the threshold first 375,000 is zero rated, but there are no 375 threshold for qualifying free zone. Qualifying free zone can elect subject to normal taxation, but is optional. If they want to use the 375,000 threshold as a 0%, they have to offer the standard corporate tax. But again, this may vary on organization to organization, operation to operation, or business organization structures, because maybe they want to part of the corporate tax group. If the qualified fee zone person, they cannot be part of the corporate tax. But again, the working or rational, the strategy we have to evaluate on the each business and the operation and the grouping structure, which will be beneficial. Here you will not get 375 threshold for zero rated. You can, and qualified free zone person is optional. Here we mentioned the qualified free zone person cannot join the corporate tax, but if you opt for this, then you can go. Small business relief will not be available for the qualifying free zone person, but small business relief available for the taxable person that we are discussing here, subject the revenue of 83 million or less. This condition we have to see. And again, we have to see what are the revenue calculation we are doing there. If we pass the de minimis test, the non-qualifying income also will be 0%, because maybe an entity organization doing some business and small amount of that not meeting the condition criteria of the qualifying income, still they give the option, okay, maybe there's some small transaction they did and they still have the flexibility, they will enjoy the benefit of the 0%. If they fail, it will be 9%. Up to qualifying income is 0%, other than qualifying income is the 9%. But this topic we will discuss in detail, what will be qualifying and not qualifying based on the activity. That is very interesting topic. Next is the multinational entity. In return also, the one point is appearing, are you part of a multinational entity? We simply say no. But what is the definition of multinational entity, and how we come to know? Let's see here. First, the multinational entity, the top-up tax, at least 15%. Recently, they already announced it is 15%. Now, we just for our understanding purpose, the definition of multinational under the corporate tax law. Okay, this we taken the guideline from the corporate tax. They're saying the consolidated revenue of that multinational organization or entity they are operating. Multinational entities operating worldwide, they have operation in different countries. So now if their consolidated revenue is more than 750 million euro, or equivalent to 3.15 billion AED, so that organization will be part of multinational organization. In our return, this option is appearing. So we have to be careful and select or not select based on this rule. If you select that, the additional regulation of the MNE will be open on that. Let's move to the next part 6, business vehicle. Now this is the interesting topic, the incorporated business or an incorporated business. During the registration part, we have the many queries and the cases where even the most of the professionals who are serving the clients, they are facing the challenging, whether it's LLC or a natural person or the sole proprietor, or what are the definition and how we consider over there. Let's move to the next. Normally we use the word vehicle. Why the vehicle? The understanding for the vehicle, if we want to travel from one place to another place, we must use the vehicle that may be the car, some other mode of vehicle that we saying the word vehicle. So similar, we say when we do the business, how we do the business and what are the form of doing the business. So this is the terminology just for understanding business vehicle. So let's see, we might set up the operation through unincorporated business, because based on the understanding or the management or the operation, they may choose the unincorporated business or the corporated business. So unincorporated business, in terms of unincorporated business, sole established, here we are saying unincorporated business, whatever the salaries and wages of the owner 100% disallowed. So this is the important part, mostly because LLC companies, they are 100% allowed, and but unincorporated company is 100% disallowed. What does that mean? If owner of the sole establishment is taking the salaries, wages, and any kind of benefit from the company, that will be not deductible expense for the corporate tax. Okay, now the unincorporated business, sole establishment. So the company can be formed in the form of unincorporated business. It will be written on your trade license. The legal type is a sole establishment or the partnership, maybe the civil company, maybe the professional license. So there will be appearing on that sole proprietor establishment, sole establishment. Okay. As earlier mentioned, this salaries and wages not deductible expense for the unincorporated business. Now, these business are transparent. Here, the important part: these business are transparent, because this is not what is the transparent. When we say the unincorporated, in term of law, the ownership of the business and the owner of the business, they do not have the separate legal personality or entity. What they mean, because the such companies, whatever the liability of the business, it will be owner of the company 100% liable. There is no limited liability or of that. Let's for understanding for the unincorporated partnership or sole establishment or partnership, because the business transparency, because here we are saying business will not pay the tax. Who will pay the tax? Just for understanding, we'll take the example. If the business have the disputes and the business, some of the supplier or some of the customer, either way, stakeholders, either way we can say the stakeholders associate to the business, they made the case against the sole establishment, and the sole establishment cannot pay the tax penalty that even the court gives in favor of the vendor or the customer. Sole establishment, let's say they give the penalty of 10 million. The sole establishment total asset is a 5 million. So they will sold the sole establishment asset and the 5 million will be recovered, but still the balance 5 million owner of the unincorporated business will pay. So this is the understanding when we talk about the unincorporated business. They say the owner still liable for the operation or any kind of the claim from the such mode of the business. So that's why they say business are transparent. Business are transparent. Who will pay the tax? If business will not pay the tax, who will pay tax? Business here the owner will pay the tax. Now our time is short, so we are just trying to quickly stop somewhere. Vakar Ahmed. Mr. Vakar, I appreciate if you avoid the writing. If you have any points, you may send to the chat, but I appreciate you not write on the screen. Business partners, sole proprietor pay tax in the UAE. Here we are saying business are transparent, they will not pay, but the sole partner or sole proprietor pay sitting in UAE. Owner will submit tax return and pay the corporate tax on that. So the natural person relief, they have to consider based on that also, but the different entity. Let's here we are saying owner will pay the corporate tax. They will file. If owner have multiple business, multiple sole establishment, multiple partnership, they will pay the corporate tax based on all the income under their own name. They will submit. So let's move to the next because time is already over. Here we are saying now we are saying the owner will pay the tax, not the sole proprietor, but on the same side, we are saying UAE do not have the income tax. So because the owner is getting the business income, they will pay the uh, corporate tax on the business income. What they are doing via trade lessons are if the owner are doing the business activity via the trade lessons, are they needed to be here, the important part, they required to take the trade lessons, then they have to pay the corporate tax on that, because there is some certain activity where they do not require the trade lessons, and like the real estate, some of they do not require if personal investment. Incorporated business, here again, the salaries and wages are deductible, but still we have to see the connected person, the relative, up to 4 degree up and 4 degree down. So we have to consider arm length rules. The incorporated business, we already seen the private PVT, LLC, PJSC, all this form of companies. Here's in this scenario, if the incorporated business will pay the tax. Today, our time is over, so I'm going to stop here. We will start the next session from the same business vehicle. And we appreciate your feedback on that. And we'll share one link where you can submit your quiz as well. Thank you very much for your time. If I'm just opening the chat, if you have some question, I'll just try to cover that. I'll just try to cover that. I do appreciate if you have some question, please share. Our next session on Sunday. We'll start from here. Yes, the video will be shared with you guys. Foreign dividend exempt or not. The foreign dividend, as I already mentioned, the participation exemption, we have to see the applicable condition. What are the condition are satisfying the condition? Based on that, we can advise, explain. Because foreign dividend, local dividend without any condition is exempt, but foreign dividend we have to cover, look into the participation interest. Because normally participation interest, I mentioned the 5% shareholding or the 4 million, the investment in the foreign dividend. But still some other clause we have to go through and then consider that. Here I just want to the question, salaries in incorporated business. Yes, salaries in incorporated business 100% allows. We can increase. Yes, we can. Again, this is the subjective area. Yes, you can increase the salary expenses, but under the arm length. Just now, the last point I mentioned in the last slide, if you see the arm length means is a similar business in the market. They are paying to the similar position amount of salary and allowances. You can consider the same, because this is very common. Normally the people ask, okay, we can increase our owners or the shareholder or directors the salaries, so our tax base will be reduced. So it is not like that. You have to be rational on that and do the calculation how much can be the increase. This is subjective area, but again, case to case, you have to see if the company is earning the 100 million and the salary of the CEO may be the different. If the company is having only the 30 million and the salary of the CEO, again, the size of the company is a small now. So relatively, you have to see the similar industry or similar size of companies, how much they are paying. So I give you the example for understanding. See here, the another point, Mr. Asif, he mentioned the natural person, if will do business or if having trade lessons will consider natural person. See, the having trade lessons standalone cannot be marked under the juridical person or natural person. You have to see the legal type. Just now, the last topic we are covering. So we just now the last topic we covered. For sure, the next we will look into that. Yes, I can take your question more also, but let's see. I'll try to answer on that. Next Sunday class, come early, and 1 hour before I will be online, so we can discuss all this quiz over there also. Because during the session we have to cover the main course also. That is otherwise because the timeline is very short. But definitely I'll try to answer on that. I'll be available 1 hour before and we can discuss all this. Thank you very much. Have a nice day. Mr. Iftikhar, we can stop here. Hope you already have the recording.
जी सर, आप बिल्कुल उसको आप स्टॉप रिकॉर्डिंग करके लीव कर सकते हैं हम लोग को।